let's decode that with Sumit Gupta, who is the AVP of Research at Centrum Broking. A very good morning to you, Sumit. Thank you so much for joining us on ET Now. And let's talk about the entire space, be it the entire healthcare space. How has the quarter been for most of them, especially the diagnostics and the healthcare segment?
Thanks for having me. Yeah, so overall, if you see, the revenue was like as per our estimates, revenue were majorly in line. While let's say for pharmaceutical companies, there was a beat on the profitability, while for diagnostics there was a miss on the profitability. And if you look from hospitals' perspective, they were in line. Overall, if you see, profitability has increased at nearly 18 to 20% kind of YY growth that they have delivered across all the three segments. So within the pharmaceutical segment, if you see, the profitability has been driven by niche launches and the kind of market share that they have been gaining, depending on company to company. So, have to take further questions on that.
Divided into three parts: generic versus domestic focused companies. Within generic, US generic companies, which one has come out with best set of numbers, and within the domestic companies, where the numbers have been the best?
So within the generic companies, from the US point of view, Cipla delivered a very good set of results supported by the niche launches. And if you see, the commentary has also been very positive. They have revised the guidance to upwards of 25.5%, which they were expecting at around 25%. So going forward, also their pipeline of Advair and Abraxane, they are expected to launch in FY26. So Advair in first half of 26 and Abraxane in the end of second half 26. So going forward also for Cipla, I remain positive on it, and then followed by Sun Pharma, which has a very good pipeline, healthy pipeline of the specialty portfolio. So Sun and Cipla are top picks within the generic pharma space. And coming to the domestic, like we continue to like JB Chemicals, considering the high proportion of chronic portfolio. And if you see, chronic portfolio has been outperforming the overall broader IPM market by around 200-300 bips, depending on month to month. But overall, if you see, the companies positive with their portfolio more skewed towards the chronic portfolio, they are likely to continue to benefit from the outperformance. And JB Chemicals in particular remains a top pick in the domestic pharma space.
Why Cipla numbers were strong? Anything specific? Why? Because Cipla, in a sense, is almost like a one-product pony, right? I mean, they only their only big forte in US market is the inhaler business.
Yes, yes. So because their albuterol market share has increased, so it has moved to 21%, which we were not so basically we were expecting around to stabilize at around 18, 19%, 20%. However, it has moved to 21%, and it continues to gain market share. However, we expect it to stabilize at the current levels. But if you see their overall, so be it in terms of market share or in terms of overall price erosion, that price erosion was also moderated for these kind of products. So we expect that to continue for Cipla, and the pipeline obviously remains strong.
If you just scan the entire healthcare space, pure play pharma, diagnostics, healthcare, in the recent correction, where is it that you're seeing value and growth visibility both in three of these clusters?
So I would say healthcare services are more positively placed versus pharma. So within that, hospitals followed by diagnostics and then pharmaceuticals. And within pharma, domestic pharma.
Talk about hospitals in particular. No doubt it was a seasonally weak quarter for the hospital space, but now you also have talks about the entire competition also increasing in the hospital space. You have two reports on about two players who are looking to enter that domain. What's your take about that? What will the scenario be for the entire hospitals space right now then?
So hospitals remain over, let's say over the past 2 to 3 years, the trend has been like there is a major where so many hospitals which have come out with their capex plans, and depends on company to company and the kind of capex that they are doing. So is it greenfield or brownfield or build to suit? So it depends on that. So let's say for Max Healthcare, they have done majority of the expansion over the last 3 to 4 years through brownfield expansion, and then they acquired JP Healthcare in the last 2 quarters. So if you see from and in Lucknow also they acquired Sahara Hospital. So and the profitability post acquisition that has increased quite a lot. So it shows that the kind of execution and the kind of demand scenario, if we break it down into let's say 3 or 4 fundamentals, So the demand scenario or the overall bed density per capita, it remains at a very low levels also today also. So going forward also, if you see the kind of expansion that all these hospital companies are doing, so over the next 4 to 5 years or 6 years down the line, you will see majority of the bed expansion going through will lead to more than doubling the bed capacity. So, like I remain positive on overall hospital space, considering uh, like basically more positive towards the large cap players like Max and Medanta, which are more towards brownfield expansion and build to suit.
Sumit, the other question is when it comes to diagnostics, right? What about the pricing scenario, given that it seems that the industry right now is fairly consolidated? There are not as many players, but I guess the competition, A, of course, is on tech advancement, and more importantly, pricing.
So pricing, if you see, obviously there has been a good competition from be it online players, be it the hospital-based labs, or some pharma companies venturing into this space. However, if you see, diagnostic is a low barriers to entry business. However, if you see the profitability to manage or to maintain that profitability is a big task for all the majority of the companies. So see, over the last 2 to 3 years, all the incumbents like Dr. Lal, Metropolis, Vijaya, these companies have come to their pre-COVID levels of EBITDA margin. And considering the volume-led growth, I am remain positive on this because majority of the, let's say, they are doing volume-led growth for around 11 to 12% kind of growth, plus a 1 to 2% mix change. So and in Vijaya also they are doing a healthy 20-22% kind of volume growth. We remain positive on these incumbents considering they are more focused toward volume-led growth and some bit of growth from the mix change. So, considering from the competition point of view, competition will be there. Obviously, as I said before, it's a low barriers to entry business. However, we need to see from sustainability of margins.
Right. Sumit, lastly, I wanted to check about generic Revlimid because after the Revlimid patent expiry, how much reduction are you expecting in the sales? Which products could make up for these losses of this revenue that you are losing on back of the patent going away from Revlimid?
So for Revlimid, so it depends on company to company. So Dr. Reddy's will be the major player where Revlimid will have a like around like 7 to 8% kind of EPS cut. However, for Sun Pharma or Cipla, I don't see much. Sun Pharma will be the least affected. So it depends from company to company.
So if that's the way how it is, then how will that change your pegging order?
So Sun and Cipla remains my topic,
All
followed
right.
by JB Chemicals.
All right. So that's the take coming in on the entire space. Thank you so much, Sumit, for joining us in the show to give us a holistic approach of the entire pharmaceutical healthcare space and what's exactly driving the growth in these particular in this segment. Thank you so much once again for being part of the show.